Art Collins here. Another system for you. Last third of the day indicator. We're looking at the day session only from 8:30 a.m. to 3:15 p.m. Central Time. This is another idea where I break the day up into three equal thirds. The first bar goes from the 8:30 open through 10:45. Second bar is from 10:45 to 1 o'clock. Third bar is from 1 o'clock to 3:15. I've given you a few systems that operate off this. This one centers on a complete day holding from the opening price through the closing based off what happens on the last third of the day. If the lowest low of the first two bars of the day that concluded at 1 p.m. minus the daily close, in other words, from 1 o'clock on, you're going lower than what the low of the day had been up to that point. And it's got to be at least 33% when you get to the close between that lowest low up to 1 o'clock until the final close. If it's 33% or more, you go long the next day on the open. And if the daily close minus the high of the first two bars of the day is at least 33% of the full day range, you go short of the next day on the open. And again, this is you're holding it all day long and exit at the 3:15 p.m. close. So I know wording it is a little confusing, but it's a simple concept. Here you have up till 1 o'clock, this is your highest high, and then it proceeds at 1 o'clock to travel higher than that. And this distance here is at least 33% of what the entire distance is. That would be a short signal for the next day on the 8:30 open. Hold it all day long, exit on the close. And here you have an example of at 1 o'clock, you've got this low, and from there the market travels lower, and this distance between the 1 o'clock low and what winds up being the 3:15 close is at least 33% of the entire daily range. That's a signal to buy and hold all day long, exit on the close. And that's what you get in the S&P from the beginning of 2010 through September 24th of 2020, 30,800 on 353 trades, almost 51% profitability, $87 a trade before slippage commission. That's a nice figure. This is not so nice, $13,600 drawdown. But again, put it in your lab, make it better, folks. And please let me know when you do. Taking that ultimate profit figure, 30,000, dividing it by the 13.6 gives you a 226% increase, which would be, had you started with 13,600 startup amount in your account, the ultimate figure would be an increase percentage that your account would have increased. All right, so this is what it looks like in all five of the major stock-related index markets. Looks like, once again, as we've been seeing lately, your NASDAQ is your best performer, $46,000 net profit with a 12,590 worst drawdown, giving you a 367% increase over those 10 years. I'm going to have shortly another idea related to thirds, so stay tuned for that. And as always, I appreciate your patronage. Until next time.